This is a presentation for Chapter 1, Introduction to Managerial Accounting, Learning Objective 2, Classifying Costs Used in Managerial Accounting. So we have different types of companies. We've already studied in Principles 1, service and merchandising companies. So service companies are going to sell their time, skills, and knowledge to their customers for a fee. Merchandising companies are going to buy products from suppliers and then they're going to resell them to their customers. So merchandisers do keep an inventory of their products on hand to be able to meet their customers' demand. So inventoriable product costs we refer to as product costs in this textbook. So a manufacturing company is going to actually produce the goods by converting raw materials into a finished product. So they're going to use their labor, equipment, and supplies and their manufacturing facilities to convert raw materials into finished products. So manufacturing companies are now going to have three different kinds of inventory. So first, they're going to have their raw materials inventory, which is going to represent the raw materials that they have purchased prior to putting those into the manufacturing process. Once those materials have been put into the manufacturing process, you begin to add labor and use equipment and other supplies as well as the facility, and those costs go into what we call work in process inventory. So those goods are the ones that are in the manufacturing process but they're not yet complete. Once those goods are completed, then they're going to be transferred to the finished goods inventory where they will remain until they have actually been sold. We can separate cost within a business into those that are direct cost and those that are indirect. So a direct cost is going to be any cost that we have that we can easily and cost effectively trace to a particular cost object. So a cost object could be a product, but it could also be a department or a sales territory or even an activity within the business. It's just anything that the management wants to capture a separate measurement of their cost. So any cost that we can't effectively or easily trace to a cost object, we call those the indirect cost. So we don't want to confuse cost with prices. The price or sales price is going to be the amount that the company is going to charge the customer for the goods or services. But the cost is going to be the amount that the company incurs to acquire the goods or services. So for instance, if a company were to purchase an item for $4 and sell it for $10, the cost is $4 and the price is $10. Manufacturing costs can be divided into three categories. First, we have what we call direct materials. And these are going to be the raw materials that we use in our production to produce the goods. Then we have direct labor. So direct labor is going to include the amount that we pay the employees who convert those raw materials into the finished products. Direct materials and direct costs are direct because both of these can be easily and cost effectively traced to the product. The third cost is what we call manufacturing overhead. And this refers to all of those indirect manufacturing costs that can't be easily traced to the specific products. So these are going to include all of our indirect materials and indirect labor, as well as other things like the cost for the rent for our facilities, utilities, and insurance. So indirect materials are going to be used in making the product, but they're either too small or the cost involved in tracing it to that product is not cost effective. And the same thing with indirect labor. These are the things that we would include in manufacturing overhead. So this diagram gives you some examples of what would be some direct materials, direct labor, and manufacturing overhead for SmartTouch Learning. In the diagram, we see a picture of a computer chip. So for SmartTouch Learning, a computer chip that's included in the manufacturing of the tablet computers would definitely be a direct material because it could be easily and cost effectively traced to each of those laptops that they are producing. Also, we see a picture of someone that is assembling something. Assembling cost, the cost of that labor is a direct labor cost. We can easily trace the amounts that we pay the employees that are on the assembly line that are assembling the product to each of those individual tablet computers. So both of those are going to be considered to be direct product cost. However, in the last picture we see a little bit of glue. A little bit of glue that might be used in manufacturing the tablet computer, in most instances the cost of that glue as well as the cost to trace the amount of that glue to an individual tablet computer would not be cost effective. So a supply like glue, the cost of that would be included in the manufacturing overhead cost rather than being a direct materials cost. Another way to look at cost are what we call prime and conversion cost. So the prime cost include the cost of the direct materials and the direct labor. We tend to focus more on prime cost when the manufacturing process is labor intensive. So when that means that people rather than machines are going to be doing most of the work. So in that type of manufacturing environment, the managers may want to concentrate on these direct or prime costs because to be profitable, it's going to be vital for that company to control those costs. Conversion costs are going to be the combination of direct labor and manufacturing overhead. So these are going to be the cost to convert those direct materials into the finished product. So in a manufacturing process that's more machine intensive, the cost of direct labor can be more minimal because the machines are doing most of the work. So employees are primarily going to be involved in the setup and the oversee of the machine production. So overhead costs could be substantial, including the cost of the utilities and the depreciation that's on the machinery. So in that type of manufacturing environment, managers might want to focus more on the total conversion cost rather than tracking direct labor and manufacturing overhead separately. So the diagram on the slide shows that the prime cost region overlaps with the conversion cost region, with that resulting areas labeled as prime cost only, which is the direct materials and direct labor, and then the conversion cost only, which are the manufacturing cost and the direct labor. And then we see where those overlap, where direct labor is included in both. We can also talk about cost in terms of whether they are a product cost or a period cost. So typically we say that our product costs are going to be our manufacturing costs. They're going to include the cost of purchasing or making the product and include the cost of the direct materials, direct labor, and manufacturing overhead. So product costs are what we call inventoriable costs. So product costs are recorded as an asset in the inventory accounts and as they are incurred, so they're going to be inventoried. The cost doesn't become an expense until the company actually sells that inventory, and at that time the cost is going to be reported as cost of goods sold in the income statement. But period costs, or those non-manufacturing costs, are going to be things like selling and administrative expenses and other expenses like your taxes and interest, and these costs are going to be matched with the revenue of a specific time period, and they're going to be expensed in the same accounting period. So we're talking about things like salaries and wages of the accounting staff, rent for the administrative building, and any sales commissions that are paid to sales representatives, or maybe utilities on the marketing office. So we identify these costs differently because we account for them differently. So this slide, it illustrates the product costs that we talked about previously for Smart Touch Learning. That would include those direct materials, direct labor, and manufacturing overhead. These would be inventoried or recorded first as an asset and wouldn't be expensed until the product is sold. But other period costs, those non-manufacturing costs like your selling expenses and your administrative expenses, those are going to be expensed when they are incurred. So we can look at the typical period and product costs for Smart Touch Learning. So at the top of this diagram we see period cost and product cost, but within product cost we see that we can separate the cost out into those direct materials, direct labor, and manufacturing overhead. Now we can see that we're going to treat things like depreciation differently depending on whether or not it's depreciation on manufacturing equipment or on office equipment. So like on manufacturing equipment, depreciation would be considered to be part of manufacturing overhead. That would be a product cost. But if it's depreciation on office equipment, that would be considered to be a selling and administrative expense, and that would be a period cost. The same thing for advertising that the company does. That's part of selling the products. And property taxes and insurance on an office building, again, would be part of administrative cost, and those are going to be period cost. But our property taxes and insurance on our factory that we use to manufacture our products is going to be part of manufacturing overhead. So that's going to be a product cost, as well as the production supervisor's salary. That is part of manufacturing overhead because that manager is over the entire facility and is not involved in actually assembling the product. But we notice that a CEO's salary would be considered to be selling and administrative expense because the CEO is over the entire business, not just the manufacturing aspects. But the wages for those assembly line workers, as we said before, they are directly involved in assembling the product, so that would be considered to be a product cost, direct labor. The batteries, the processors, all of the materials that are directly involved in manufacturing the tablet computers are going to be the direct materials. But any of those other manufacturing supplies like that glue that we talked about, those would be included in overhead. We have freight that we have to pay when we purchase those direct materials, those raw materials. Any freight in on those raw materials would be considered to be part of the cost of the materials and would be part of the product cost. But any delivery expenses that are involved in shipping our products out to our customers, that is considered to be a selling and administrative expense and would be a period cost. And that is the conclusion of the demonstration for Learning Objective 2.